Good morning. This is Dennis Wilburn with the Active Trend Traders. It's good morning. It's still here in California. It's 11:30 in the morning, but for most folks, it's good afternoon. Welcome to the last day of trading for April 2016. Market's doing some very interesting things over the last few days since we met last week. I want to remind everybody that you can take your time and read this whole disclosure at your convenience on the recording, but all materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And Michael is not with us today, and so this is his European disclosure. I want to welcome anybody who is, this is your first time on the webinar. I hope that you find it, one, very informational, and also a good preparation as you look towards, okay, how am I going to trade going into both next week and perhaps even several weeks from now as we see what's going on in the market. I am very much a person about wanting to coach and teach folks to be better traders, or no matter what level of trader you currently are. Last week I had a really good training session on symmetry of both time and price. The emails that I've gotten back from that training webinar have been very good. Basically, folks went, wow, we didn't realize that all these things go into doing some analysis, and that's one of the reasons why we only concentrate on a very few stocks, because if you're doing a thorough analysis of the stocks on your watch list, you'll see I need just a few. This week, Wednesday evening, we will be covering how to use intraday charts during after-hour analysis. I recognize that many folks, are gainfully employed and work during the day, and therefore they need basically they don't have a chance to look at intraday charts. However, there are some really great clues that present themselves on intraday charts that at least reviewing them after hours will help you be more aware of hidden levels of support, resistance, timing to get into to trades based on where your TSI, where your momentum is on an intraday hourly chart, can give great clues to say, okay, here's how I want to plan this trade, and the conditional orders can be placed from there. So that's what we'll be working on. So this week, as you saw last week, basically I said that the market was showing signs of tiredness. Is it ready to sit down? The market was mixed. Anytime you see those kind of combination of things, especially the mixed market piece, it's a time to sit up and take notice. As we saw last week, the NASDAQ was acting weaker than the other indices and seemed like it had already done its topping process and was rolling over. And sure enough, we see fulfillment of that this week. Resistance has been tested and held, which means that the ceiling is in place. Now, what I'm waiting for, basically on each one of the indexes, especially the S&P and the NASDAQ, waiting for short setups. Waiting for short setups on the NASDAQ 100. The Russell is kind of interesting. Over the last several weeks, it showed some nice strength. It has gotten up into a resistance zone, and we'll see how it's holding up there. But it did hold up surprisingly well. It had held above its 8-day moving average. We'll see if that continues to happen. Outside influences, volatility is returning into the index. Somebody sent me a note early on to say, hey, good call on the VXX ETF, which is the ETF for the VIX of the S&P, with the anticipation that some volatility was going to be returning to the market. So we bought a few calls on it, expecting the volatility to increase going through the June timeframe. So far, it's working out okay. Have you noticed we've had a very violent earnings season so far? If a stock has done well and pleased the analyst, it was rewarded with a big bounce. We saw that today in both Amazon and LinkedIn. We saw that yesterday in Facebook. However, for those stocks that disappointed, we also saw them get hammered, such as Google, Netflix, and I think to Starbucks to some extent. And so we'll look for that to continue. Apple got whacked and has not recovered yet. Apple is now on my short list, and I'll be looking for opportunities to potentially get short Apple. It makes me quite pleased to be able to short Apple for a lot of different reasons. So let's take a look at last week, the percentage of stocks above their 20-day moving average. And this is a combination of the NYSE stocks. We see it had pushed up, touched off the 80 again, and dropped. And as I've said before, Mike and I do not use this as an indication of when to go short anything. It's just basically an indication of what's going on in the internals of a non-weighted index. And we believe that that's more revealing than trying to, interpret some of the stuff that's going on in either the S&P or the NASDAQ or even the Dow, because they are a weighted index. And so a few stocks can have an overwhelming effect on the performance of the index. Here's where we were last week. Here's where we are this week. Now, when this particular index indicator does become of interest to us is when we get down in these areas down here, because it tends to, when it gets oversold significantly, where a large percentage of the stocks are in fact below their 20-day moving average, there tends to be a reversion back to the mean of at least the 20-day moving average. And so we'll utilize these signals to provide us some alerts, and then we'll apply our other technical proprietary indicators on when we want to get into a particular trade for the early warning alert system. What I'm looking at right now is as I said, I'm looking to get short the market on any kind of pullback back up to the moving averages. And for the early warning folks, what I'll be doing is sending out a courtesy alert when I start to go in and enter positions in the inverse index ETFs. Because they had some, really nice moves, and if the symmetry that has been presented in the market going back to October of last year repeats itself, then we can stand by for some potential really nice moves up by the inverse index ETFs. But right now, not ready to buy. As we see, we're continuing to drop today. What about the percentage of stocks? We also want to take a look at the percentage of stocks on this index that are above their 200-day moving average. There's an adage with technical analysis that if a stock is above its 200-day moving average, you can consider it to be in an uptrend, and you have to evaluate is it a longer-term uptrend or a short-term uptrend, and evaluate the the swings to and fro of the individual stock. Last week, this number was up at 57.98% of the stocks in this index were above their 200-day moving average. As we can see, as we're closing out the month of April, that number has gotten back down to 54.69%. And one thing that I just want to note is that depending on where we close today, if, again, this is the monthly, so today's the last day to, as we can see, the S&P, or the spiders in this case, have in fact tilted back down. When we came in and looked at this last week, it was up in this area, and this line was going straight up. But as we can see, we're starting to tip down, again, putting this longer term wedge pattern into play. Mike highlighted on Wednesday night that we have to remember that these are monthly closes. And so in reality, when we look at this on either a weekly and or a daily basis, what we'll see is back in the February-January timeframe, the prices of the spiders had actually dropped down into this level. And so that's why it's important to take a look at various time frames and to get a feel for what was the average true range of these spikes. And that way it gives you that way you're able to establish another level of support and or resistance where price action may visit. As we see right now, if prices are going to hold here against this resistance, then we could potentially look, and it holds the same trajectory here, that would put us down about the first part of June timeframe to hit the lower portion here. Again, if volatility increases and returns, it may happen faster, or we just may get these wide trading days on a regular basis. So here's where we were last week. The Dow was up 3.2, 3.3, 2.1, 2.3 on the S&P. NASDAQ was down. Comps were down. Russell was up slightly. Roll the clock forward 1 week, and what's happened? We've got the Dow now has been not down, but down from last week, so it's still showing positive for the year. The S&P, as you can see, has lost not quite 2% from where it was last week. The NASDAQ and the NASDAQ composite, they appear to be accelerating their move down. Now these are very major indices within the market. So when they start accelerating down, it's time to pay attention. Something's going on. We're having a disconnect between the S&P, the NASDAQ, and now also the Russell is back into negative territory for the year. Here's the comparison with where they are compared to last year's high. And we can see at one time this year, the Russell was all down way past 20% from the all-time high, and the composite and NASDAQ were approaching the 20% range, which is considered and defined as a bear market territory or bear market itself. So let's see, look at the charts. Here we go. A couple of things I want to highlight before we get into the individual indices is one, when the markets are weak, if a stock reports, has really great reports, as did LinkedIn last night, it gapped up, but then look what's happened. It gapped up into a resistance area and then sold off. Now, if this was really a strong market and it reached, gapped up that match, you would expect it to take on off and break out into this gap down window. But as we can see, right now the price action is just not doing that. Take a look, and I want to take a real quick look at Amazon. Earlier, yeah, Amazon, another one of the situations where it actually gapped up into an old resistance zone that we can defy by these tops and these bottoms over here. It gapped up into that old resistance zone on, really, a great earnings report. But look what's happened. Now, after digesting that, the rest of the day so far, it's been selling off. Now we still have support down here in, go to one of these. We still have support down here about the 640 level. And so if the market rights itself, yeah, you're absolutely right, Tracy. Facebook has done basically the same thing. And that's one of the things to observe and take a picture. If the stock has been in a nice uptrend, it's trying to reverse its its trend from this downtrend over here, but it still has highs to the left side of where the price action currently is. Well, the highs over here in this resistance area, they act as overhead supply, so that when prices start pushing up there, these are the guys over here who bought Amazon on the breakouts, and then Amazon failed. And for the last, since like, about January of this year, so for the last 4 months, they've been, saying their prayers every night, dear Lord, please let Amazon get back to where I bought it. And so what's happening is it got back to approximately where they bought it, and they said, I'll never do that again. And they sold. And that's what's pushing the price of Amazon down. I don't know if you guys have ever thought about, the psychology and the trader's sentiment or the investor's sentiment that goes on. But that's what you're seeing. Every time you see this overhead supply, remember, if the stock is on a big uptrend, that's where it's probably going to run into trouble. I'm almost say trouble. That's where it's going to run into an area where it will likely stall and then possibly regroup. I mean, this uptrend here is still well in, is still, has not been taken out at all. So the shorter term uptrend that started back in February is still in effect for Amazon, but clearly way extended from its moving averages on both the daily and the weekly chart. And Tracy mentioned Facebook doing something similar. Facebook, I want to do a pre-earnings run on Facebook. Yeah, you're exactly right. The only thing about Facebook that makes it slightly different is I'm thinking that this is an all-time high on Facebook. Let's see. It appears that it is. And so it actually broke out to an all-new high. And so it may, if it holds, this breakout at that point, which it's already penetrated a little bit, that makes it a little bit more positive. But this breakout, as of today and where the prices are right now, has in fact failed. It failed yesterday. So let's get on to the SPX. Yeah, Mike Traeger can't be with us today. So SPX has fallen down into a, let's do a little bit of rehashing. Last week, I think we get this shooting star followed by the 21st, which was, yeah, the 21st was Thursday, and the 22nd was Friday of last week. So on Wednesday of last week, we get a quasi shooting star, which then was followed immediately after that on Thursday with a long down day, qualifying this as an evening star candlestick, which that tells us that that is a bearish reversal signal. Then what do we have going into this week? We get this nice little rally back up, however, weak rally. If you look at the SPYs to see your volume, the volume is very poor on this. Gets back up into a resistance area and then rolls over on Thursday and Friday and breaks back down into, over here on the weekly chart now, breaks back down below the channel line that had defined the downtrend going back to around July of last year. Again, very big on symmetry. I have taken, let me copy this and I'll move it back to where I first saw it. It basically goes about there. What I'm looking at for the potential move, as we know, topping is a process. It is not typically an event. And last October and early November, the market topped, then rolled over into this downward sloping channel until it broke out the bottom of it. And I want to say that is the first week of this year. But it just basically ran up, hit its head, fell down, ran up, hit its head, fell down. Well, if we get a symmetry of this move right here going forward, then I would anticipate that we would fall back down to this channel, which by the time it gets down there, it's going to be approximately the 38.2 retracement level, and then a potential rebound. Playing this going into trading this going into next week, if I want to be trading the inverse leveraged index ETFs, I'm going to look for a potential retracement back into the midsection of this weekly candle, or even up to the line itself, the downtrending line itself. As you can see on a weekly chart, we definitely have the momentum turning over, and now we have the true strength indicator turning over also. As you'll notice is that the true strength indicator didn't actually break down after last November's move until this point right here, which corresponds. That was not a pretty line. There we go. Let's draw another. There we go. So we get a straight line going here. It didn't actually break down until it had put in that hanging man, and then it broke down the following week. Now, I am going to be glued to my computer every night for those who are premium active trend traders members, so that we in fact can take advantage of this if what's happening is the price action is basically going to fall back into this downtrending channel. And if I draw a trend line in here, so we went along 1, 2, 3, 4, 5 weeks, and then it started down, and then it basically fell at that trajectory. So if we go 1, 2, 3, 4, 5, about there, and I move this over to 1, 2, 3, 4, 5, about there, and extend it down to where it might fall. Well, we're sitting at about 1760, which was actually below this low here, but it's right back down into a level of resistance, or support, excuse me, that had previously been in. When might that happen? Well, if we're looking there, okay, that's July 18th. And so, Chris, that's a good question. Chris asked a question, would it be selling a call on strategy 3 or buying a put on strategy 2? I could do both. Okay, and so that kind of paints a picture of what we're possibly looking at moving forward, with a little bit of a time frame, because what's happened, again, is maintaining symmetry. The move from here to here took about that long. We move that forward, activate, move that where it finally made its move, started making its move down again, and it's within a week. And so I'm thinking, okay, that's pretty good symmetry actually, to be within a week of the fall. And that's the kind of stuff that we want to be looking at with the active trend trading. But we will be all over this trade to the downside for both the active trend trading folks and the early warning folks. And again, please understand that it will be a courtesy call for the early warning folks to be able to capture some of that stuff to the downside. Let's take a look at the NASDAQ. NASDAQ is basically, I left on the, what did I leave on here? I think I left on my fibs from the other day. Let's get rid of that. Let's get rid of that. Okay, what's happening with the if we draw a fib line just from here back up to here, as you can see, look what's happened. And I didn't draw that very well. Let me draw that up just a little bit. There we go. As you can see, look what happened. It came back and did the 1/3 retracement today. And so once it failed last week, failed early last week, it did in fact fall to that level. Now we have the true strength indicator starting to get a little bit overextended, but as we see over here, what I'm looking at for the NASDAQ is any rebounds back into this moving average congestion that we see here by the 100, 200, and 100, the 50, 100, 200-day moving average, and or the 8 as it continues to drop. We've had a cross between the 8 and the 20. That is a bearish cross. And so I'm going to basically, on the NASDAQ, which would be the QQQs, looking for opportunities for short downside trades in that. Now on that, I would be trading either the puts on the QQQ, or I would buy the SQQQ, the inverse leverage index ETF that emulates the QQQs, which in turn emulate the NASDAQ. At this point, I'm not going to try to short it here because we're late to the party. However, I will wait for that rebound. You know, if I get a rebound back in here to the 4,400 level, that might be an excellent place to say, okay, and then it weakens and then falls again. That might be an excellent place. That's where my time to go short or go to the downside radar will pop up, and I'll go, aha, this looks like a valid place. Let me get rid of my fibs. And on the other side, I'm going to do this really quick. Again, we talked about that symmetry of move. So we move from here to here. And if I take that same line and it stays within this trend channel, and I move it forward, where might it fall to? Isn't that interesting? It would fall at least to on a same trajectory, but isn't it interesting how both we have the downtrending line and the 123.6 retracement kind of coinciding there and meeting. And anytime you get multiple clues that are coming to the same point, that's a great place to pay attention. And if we keep that same symmetry, that would put us in that ballpark around the end of June, which goes back to the other aspect of what I was looking at with the end of June, is that the symmetry that goes back to 2008, expecting a similar type pattern reaction that we had back in 2008 to take place. And in June, last part of May, first part of June, is when the markets fell apart after the initial downturn from 2007, 2008 time frame. Russell again. Excuse me. Okay, Russell. And I've got two lines in there for some reason. There we go. Now I have one line. There, it looks better. What do we have going on? Well, we've got the Russell basically pulling back into, now it's dropped the 8, appears to what it wants to drop the 20-day moving average. And where's the level of support? We get down into a support zone that starts at 1107 down to about 1089 on and this is what I'm liking. We're catching this potential rollover early. And so what will I be looking at on the Russell? Any testing up towards the middle third to 1/2 point of this week's candle. If we close right where we are right now, this candle for the week of the Russell is a bearish engulfing pattern, which it has, of course, negative connotations. We have, and you might ask yourself, well, what gives this pattern more credence than some of these other ones we had down here? Well, we've got a couple of things. First, we are approaching a level of support on the TSI, or resistance, excuse me, on the TSI. What will give me more confidence is if my momentum would drop over on a weekly basis. That may happen next week. And then we have, positives on the daily is that we are rolling over, and that from this high here to the highs here of the TSI, we have a negative divergence. Same thing on the Russell. So this move from here to here had less momentum behind it than the move that basically took up place from here to here, and then you get these little short swings here. Less momentum than from here to here. And so Russell looks interesting. Again, I'm not in a hurry to do anything today because, as you all know, that over the weekend, strange things can happen. We don't know what's going to happen globally. We don't know what's going to happen in the U.S. And so, since we are aware of what appears to be a weakening and it just started, we can now pick the places where we want to trade it to the downside. Make sense? Okay. So let's knock out the rest and we can look at some stocks. I am going to keep this chart that Mike did up Mike found of the quarterly stocks, the S&P, and I've highlighted this week that we are still under the dome as price action continues to work out. We may have to extend the dome a little bit, but maybe not as we continue. And this dome, again, is reflective of topping action. And the topping action on the S&P, just be aware, actually started back in 2014 and is now coming to fruition in, 2016. The S&P currently is up, let's see what the S&P, let me pull up there we go. Okay, the S&P is currently sitting at 2055, which is right about that same level right there. So we are still under the dome. The comment that Mike made, and one of the reasons why he utilized this chart, is it's the long-term quarterly chart of the S&P. And the story that went along with it is that every time you get a cross on the 816-8 MACD, that led to, not that led to, but that showed that, okay, the path of least resistance for the market at this point is down. And we got one of those towards the latter part of 2015. This is kind of jumbled up over here a little bit, and it hasn't rolled over totally. But once those, that is a confirming signal to say, hey, more downside is probably in the works. There we go. Okay, path of least resistance. You probably can guess what I'm looking at right now is path of least resistance is down. We may get a little bump up before continuing. In order of highest weakness, I see this. That's the NASDAQ. SPX next weakest. And then the Russell. If the Russell, but what's interesting is while the NASDAQ appears to be the weakest, that I would lean towards the Russell and the NASDAQ for potential downside trades. and then maybe the S&P. We shall see, but because if the Russell disengages, it tends to fall more rapidly. And so, hey, Eric, that's a great question. Let me go back and just take a real quick look at that. Eric asked the question, did we get valid buy signals? It looks to be that it was in fact fairly valid back in 2004 and long term. And again, it's not so much utilizing, you have a confirmed buy signal, although you had earlier buy signals back in this area back here. But that was a confirmation saying, okay, the long-term trend is in fact switching. Something to be aware of. So closing out the month, it looks like we'll close out the month at about 39, a little bit over 3,900 in profits that have been booked. We had the strategy 1, strategy 2, and strategy 3 all contributing to what's been going on this month. Our equity curve is starting to turn up, and at the current trajectory, it would show us hitting the straight equity curve is just a reflection of getting, doing 40% worth on $100,000. And so we will keep working to keep that, pushing that up as we move forward. One of the trades that I really like is the strategy 3, which is basically owning some long-term leaps in both Tesla and S&P. And as you can see, this has done quite well. We opened this position back in September of last year. And in that time frame, since September of last year, we originally paid $9,010 for it. We have now collected $9,166, making our cost basis where we have more than paid for the individual 2 leaps that we have, and we're sitting at about a 50 to 53% gain on this so far. I have about I put this on about 2 weeks ago, this particular chart, and so we've got 38 more weeks now to collect premium. And if I can collect premium at about $327 a week, then we'll achieve our objective of 100% return on top on this $9,000, which is actually a 200% return because we've paid for the underlying entity. So if you're interested in that, you can find more about strategy number 3 at this website, or at this website for the premium members. And I'm going to be doing a presentation are you just selling Tesla? Chris asked him, are you just selling Tesla calls and puts this month? Yeah, that's what all I was doing, just basically selling puts and calls against the long positions, long leap positions. Next week, for those of you who are participating in this trade, next week is earnings week for Tesla. What I will do, because the implied volatility on Tesla tends to just expand in a crazy way, in that it will probably go up somewhere between, it'll be up about 150 to 200% by the 4th when they have earnings. I will hold off and sell my puts and my calls way out of the money on the day of earnings, and then the implied volatility crunch after the report earnings tends to give us a really nice profit almost immediately, as long as the spread is wide enough. Yeah, I know the implied volatility is already up to 80, and it typically sits down around 45 to 50-ish. And the highest volatility I saw in Tesla in the 3 or 4 years that I've been trading this particular strategy, it got up to 215 the day of earnings, which those of you who trade options know that that is absolutely crazy. Hey, this week at the BAM meeting in San Jose, that's the Bay Area Moneymakers, we're going to be doing using indicators correctly. I'll be doing that. And then our training that we do every Wednesday night. And we continue to work on these. And as I've said before, if you have a group that you would like somebody to present to, I can basically, I would love to do it. Love to provide a presentation. I have several presentations that are specifically for IBD type groups, and I have also several presentations that are really great for option groups. One of the things that my wife and I are in the process of doing is basically selling our house in California, and we will be moving back to Hawaii, and it appears that's going to be on the first part of June. However, we will be back. We will be back in the Bay Area for the, we'll still continue the BAM meetings, Bay Area Moneymaker meetings, and I'll be back for the first week in August meeting. But then once we do that, my wife and I are going to take a cross-country trip. We've always wanted to do that. When I was in the Navy, when we would drive cross-country, it was always we were in a hurry to meet a schedule. And we've always wanted to drive cross-country. So we're going to be going up into Boise, Idaho, back down through Denver, on across to Nebraska, Missouri, stopping and see friends. We'll wind up with visiting my mom in Arkansas, and then come back through Texas, stopping in probably Dallas and Fort Worth and down in Austin. And so if you live somewhere that's close to being along that general path, hey, would be glad to stop in and either present to your group or just have a cup of coffee, shoot the bull. And while we're doing the cross-country thing, I will continue to put out my daily updates. And so nothing's going to change as far as active trend trading and the BAM goes, because we will be coming back into the Bay Area for the first Saturday of every month for August, September, October. And then we'll do some webinars for November and December. So that's kind of the plan. I know some of you have been asking questions about what's going on, and that's what it is. We're at that point where it's time to downsize a little bit and get back to the land of palm trees and umbrella drinks. So I want to remind everybody that if this is your first time with us today, that the active trend trading system is based on the 5 pillars of active trend trading, and we focus on what to trade, top IBD growth stocks and index ETFs, when to enter, when to exit, what strategy we're going to use, and what to expect, and we put out trading alerts specifically for those. We have built basically 3 separate strategies on top of the active trend trading system. I'm very thankful that with all the crazy stuff that's going on in the market this year, that this strategy number 3, wealth and building and income, has been working exceptionally well for us this year. Let's see, here's a trade we did. Pre-earnings is strategy number 1. We did this trade a couple of weeks ago, and it was a really nice trade. Got a full extension up here. We got in here at 4.7 at $50.14. We alerted all of our members that here's what we're trading, where we're getting in. We took off part of the position at a 5% profit up here at T1, and then when it reached up here and hit the 161.8% extension, we fired out and closed the rest of the position. And we were basically only trading with about $10,000 of our $7,000 of our account size, but we closed out with almost a 10% gain on that particular trade. So I don't do this very often, but for the month of May, if you have been thinking about trying out active trend trading, You can do a 1-month trial membership for only $4.99, and then then you can make your decision whether or not you want to continue on at a discounted rate, or just let it expire. But the $4.99 gives you total access to the Active Trend Trading website, all of our training, text alerts, training videos, midweek training webinars, email alerts, access to the website, and you can basically take advantage of if you will go here to that particular website. And if you forget about that particular website, you can also go. Oh, thank you, David. Thank you. I appreciate that a lot. David just commented that you can go to my YouTube channel, which is which is basically the Market Tech Talk. Go here, and it says ATTS trial membership now, and you can punch there, and it'll take you to the same sign-up page. Thank you, David. I appreciate that. Karen says, this is one heck of a deal. David says, the weekly training sessions are superb. And what I like about the weekly trainings is that they build on top of each other, and you have total access to them as long as you maintain your membership. And so like I said, I pride myself in wanting to be able to teach and educate and help folks become, one, better traders, but also to kind of fill a void. When I was learning how to trade, when I had my active careers in the Navy for 23 years and in corporate America for another 10 years, no one was really meeting that need of trying to keep it, simple and clear, so that I could learn how to trade the basics. But, what was it? Einstein once said that never overlook never think simple is unsophisticated. So, hey, I want to see you guys next week. Have a great weekend. My wife is on her way home with the grandkids, but I do have time to look at a couple of stocks if you're up for it. Anybody got some stocks? SFM. Yeah, Tracy, SFM, of course, you know that we are in this for a pre-earnings trade. I still like SFM. It reports earnings next, when? The 5th, before market opens. So that tells me that, okay, I want to be out of this trade either when it hits 5% and or the 5, 10, 15% from where we bought it, or I will close the position the night, prior to the market closing on the 4th of May. There we go. What's it doing? Basically, it's holding the 50, which is good. Our stop loss is down below this level here. And as you saw with the Ruger trade this morning, because the market is acting really kind of flaky, I tighten my stops on it because I don't want a big blowout or bad news to take me where I have to go out with a full 4%. And so we were taken out of the Ruger trade. But this one's holding up, nicely. If we could just bounce it up and get it back above this 28, 83 to 29. We got into this trade, if you'll recall, at about 27.50 as it was bouncing back up off the 50-day moving average. And so in reality, the 5% gain is up at 28.99, and that's what we're targeting. We'll see if we get a little bit of a kick up next week as it goes further into earnings. If not, we will continue to take a look at it. Again, I would think about moving my stop loss up to maybe 27. But the problem in doing that is we've got that moving average there, and I think this is the 100-day moving average, that could also act as a level of support. But again, I don't want to lose more than 4% on this trade since it is specifically a strategy 1 pre-earnings trade. Let's see. High tie flag, yeah, possibly. Dorothy, one of the things, this is a weekly chart over here. Yeah, you can clearly see it is a flag. The thing that is, and it's stayed fairly tight. Volume's gone down as it's pulled back. All positive things, but it may not get its reaction that we're looking for until after earnings. And if that's the case, that's the way it is. Let's see, let's take a look at SFM, TZA. This is the 3-time leverage inverse index ETF of the Russell. What do I like about it? One is I like that we're getting a kind of a double bottom thing going here. I would go to the Russell or the IWM, Dorothy, to establish my stop losses, because as you know, with the inverse index ETFs, they tend to lose value because of the entities that they have to buy and or sell to emulate 3 times the daily move of the index. And so if you put a stop loss down, if you're in this trade already, you put a stop loss, the simplest way is just put a stop loss right down here below the 37.63 level, the low, 25, 50 cents. But this is showing us a lot of positives that I'm liking. One, it appears as if the TSI is ready to start up. The momentum has not flipped for us, but I'm getting a bullish harami on a daily chart, on a weekly chart, and we're pressing up into the 20-day moving average here. And the other thing that I really like about this is, if it came back down and retested down in this area, or maybe retested, the midsection or slightly below it, you could definitely trade that, off of that kind of bounce. If we can get this break above the 20, then, we can anticipate a move at least up to, the 45 level. One of the things that I was noticing on several of these, including VXX, is that we kind of almost have a shakeout type of opportunity. In other words, see these past lows over here, if that's kind of a level of resistance, that if it breaks above that, and then that resistance does, flips over and changes polarity and becomes support, then we could, plan trades off of that. Also, if you're reviewing that, take a look at what took place last April through June, July with TZA, and also back here in the November, October timeframe. And be aware that, this was one heck of a run. If we get just a bounce back from current position, get my trend line, let's say we retest back here at 40. Well, that run all the way to the top, I'm not going to say it's going to go back to 73. We don't know that. But that's an 84% run. Let's say if it only gets back, halfway from that point. I'm going to take a little bit of time with this because I'm very interested in what's going on with the market, and if it does weaken. Well, what happens if it gets back, after this downtrend here, we're finding support at past levels. If we make it back to, let's say $40, approximately 40. There we go. If it makes back up to 38.2 percent retracement, Dorothy, you're looking at a 28% gain. Makes it up to 50, well, then you're looking at about 39. And so we're not going to be greedy, and those are logical points where it could potentially turn around. What does this 50% coincide with? Past levels of resistance. So keep that in mind as you continue to look. So, and so, working down the road here. Yeah, Dorothy, I spent a little bit more time on that just simply because I really, that's where we're going to go to those, where I'm going to go to those inverse ETFs if the market continues to weaken. What are we doing here with Ruger? Yeah, Tracy, what took place today, I basically said, you know what, this is not looking positive. Remember how we studied on Wednesday night how this setup is very positive for a potential pre-earnings run? But the thing about it is we got in here at just about 66, similar to how we'd gotten into PayPal and XRS, and it immediately tells us, I'm not going to work for you that way. And so if it's not working, what do you do, with your employees who don't work unless you work for the government? You fire them. And so basically it didn't fire off to the long side, and we get this, basically stopping at the 50-day moving average, and that's why I tightened the stops this morning. Just said, it's not worth it's not worth. What happens if it fell all the way down? And in fact, we got out at I want to say 63.50, 63.49, somewhere around there, and it could have fallen all the way to here. So right now on Ruger, since it reports after hours on Monday, too short a time frame to let the trade work out. Eric asked a question on the EWA short trades. On the EWA, we trade basically a blanket lot that is about $10,000. So whatever that equivalates out to in shares. Let's see. I want to hold on, Eric. I want to get to Bob. AHS. AHS is showing similar weakness to what the market is showing. It is extended away from its index, from its moving averages. The only redeeming, I won't say the only redeeming because it has been a positive move from here up to here, is it may be setting up for a potential pre-earnings run. But it has a level of, Pierre, it's, it kind of reversed right at resistance. And so we would want to see it kind of give a little bit better pullback than this, but it may not give a pullback and may just bounce off the 20 there. One way of trading this is if it drops the 20, you could then use the 20 as a trigger to get back in, bouncing back above it. There's two Erics. That's interesting. Okay, let's see. I'm going to get the PRF. Okay, Bob, you asked about PRF, power. I wouldn't touch PRF with a 10-foot pole. It's a piece of junk. It trades 142,000 shares per day. I'm only telling you, I'm giving you my full opinion on this, Bob, simply because you're my friend, man. It basically trades such small small volume on a daily basis. It is a PowerShares FTSE portfolio. Yeah, it's just there's not enough volume on this that would interest me. Thanks, Dorothy. And so then you take a look at versus the spiders for future trades. Yeah, the SPYs, the SPYs are so much liquidity. Yeah, it's about $100 more per. But if you're trading, I know you're an option trader, but look at the difference in the, it trades over 100 million shares per day. That's huge. Okay. FNV, Franco-Nevada Corp. I know absolutely nothing, Judy, about FNV. What does it do? Trade's okay, about over 1 million shares per day. It's got earnings coming up on the 4th after the market. It has kind of already done its pre-earnings run. It may break out and move higher on a weekly chart. Again, it's hard to predict where it's, okay, gold and silver, cool. Yeah, it's getting an upshot with the market being down. It's getting an upshot, kick, shot in the arm. Both, almost all gold and silver was, especially gold, was getting a shot in the arm today. Would have been a great entry right here, about 65.85 to 66, coming off the 20-day moving average. And it looks like it, again, this is a modified version of that pre-earnings run. Back to support, find support, and then rebounds. Thanks, Eric. And Judy, you also had, I gotta keep an eye on the, okay, I can do a couple more. Report. Yeah, see the bounces this thing's getting. And we have to look at if the market goes into a tank, the gold stocks may in fact turn around nicely. I like this setup, Judy. Not that I'm a big gold trader. Got all kinds of volume coming back in, but this setup here, this pull back to here, some symmetry of move back to here, and so what this could, if we get a nice breakout about the 1437 level, then the measured move on that would be about $10, because we would basically just take up to about there from high to low of that pattern, that little V pattern, and then just take it and activate it and move it up to the approximate breakout point. And that puts you up about $25, which is around past resistance. Interesting. Interesting. So, hey guys, I am going to call it a day. Like I said, my grandkids are on the way over. If you have a specific question about a specific stock, just shoot me an email. Well, wait a second. I'm going to do Eric. Eric, I'm going to do Sino. I'll do the rest ones on the list, but I'm not taking any more list than this. Sino, what's Sino doing? It is you got a nice bounce. What does Sino do? Sinosure. Thanks, Jeff. Tell me what Sino does, Eric. Medical, not biotech, is it? Biotech's always give you a wild ride. You get a positive reaction on earnings. It pulls back to the breakout and then moves back up. That's positive. I would want to run the stock checkup on it on the IBD website just to see what kind of fundamentals it has. But purely from a technical standpoint, yeah, you got nice support down here at 45. And, it is extended. So I would wait for a pullback type setup. This pullback setup on this little flag here might be okay, but on a weekly chart, yeah, you'd be looking at, if I get a pullback to around 47 and my TSI is, has gotten down here, that would be a potential buy point. If you're already in it long, depending on where you got in it, would determine whether I would want to take out some to take some profits off the table. Gary asked about IBB buying puts. Yeah, it looks like, we can basically, let me get rid of that junk. And you've got this trend line here, which it never got back up to before turning over. So now you've got a new trend line starting down here that you can just, a top for resistance. Just put, And so you get a downside break today. It is broken back down below the 8-week and 20-week. This is a weekly chart. Doing the same thing over here. When's it? This is an ETF, is it not? Yeah, okay. So it has no earnings. So I would be looking on this one just basically a move back up into the 50 or into this moving average cluster that's going to happen if I were going to be buying puts on it. And that would be a good target. Brian, let me pop that up real quick. You can find it either on the web. Whoops, let me go back. You can find it on, if you go here on my YouTube channel, which is Market Tech Talk, you can find it here. Just click on this and it'll take you to that. Or you can just type it in at this right here. Here's the website, activetrendtrading.com /ATS-trial. And if you can't get you into that, you can always just send me an email. So with that, folks, I'm going to call it a day. Thank you so much. I hope that you appreciate where we are in the market and look forward to having some fun in the coming weeks during the week of May as we keep our uptrend going on our equity chart. So see you later. Bye.